So deductibles. Remember, deductibles are going to work like a teeter-totter. The higher the deductible, the lower the premium. That's exactly how it's supposed to operate, which means the more responsibility that policyholder is going to take, the less they're going to have to pay. So you can get $1,000 deductible on a homeowners. I like to be really careful going anything above that. Now, statistically, 40% of Americans don't have 500 bucks in their savings account. That also means 60% of America has well over that. So I like to have that conversation. Beth, are you going to be comfortable with $1,000 deductible if your home goes up in smoke? Because at the end of the day, if you set their deductible at $5,000, but there's just no way that they are ever going to have that kind of cash without pawning grandma's wedding ring, then you don't want to write that. But make sure you have that conversation with your policyholder. Where are you comfortable? And they don't mind having a $10,000 deductible if the company will allow. Some companies only allow so much. You want to make sure that you're having that conversation. If they can afford it and they're happy with that, proceed. But on the other hand, I like to look at deductibles meticulously. If it's only a couple of bucks, then why would I write them at 5,000 if I can write them at 1? So it is an extra step I take as an independent agent to make sure that my policyholder is informed. I don't want any surprises. The home burning down, any damage to the home, the tree falling on it, that is awful enough. Losing everything that you own is terrible. And the last thing I want is to ask that policyholder for more money than what they can afford. I do not want grandma's wedding ring pawned.